Good morning, everyone. It is December 20th, Wednesday at 6 a.m., half an hour before the market's going to open. I apologize for missing yesterday afternoon, but I sent out that note that it's mostly chopping sideways, slightly up. What I didn't notice at the time of sending that out was there was actually some pretty big movement in the small cap stocks. So that's really interesting to note. So we'll take a look at that before we get started with the morning and look at our futures. So if we go over here in our SPY, we can see that we creeped up, but it's mostly sideways chop. But we can see that it looks like in the pre-market, we're going to open a tiny bit lower. And if we look at QQQ, same thing. Although the upward movement is actually, it's a lot more upward movement than sideways movement. This is a continuous slope going up. And with the Dow Jones, same thing. It was a little bit more upward movement breaking outside of this sideways motion over here. But when we look at the Russell 2000, that was bigger. But so this doesn't look like a huge bar relative to these sideways motions. But what you can see is that the Russell is up 1.94%. So almost 2%, whereas the SPY was only up 0.61 and QQQ was up only 0.51. So this is a big move in the IWM, and that we are above this pink line resistance. It brought us above this pink line resistance that we've been watching. So we have our first close above that resistance. So we want to really start paying attention to the IWM, to small cap stocks, because those are going to be where our best opportunities are going to be in the near future. So what we're looking for is the low today to be above that pink line as well. Let's take a quick look at the ARK. Yeah, ARK is completely above its resistance now. And with its low yesterday almost above the purple line resistance in this case. So it's going to be very interesting to watch. What we want at this point is after we break out of these resistances, we're going to pull back to touch the resistance, most likely, and that's going to be our best opportunity. We can start after we see a low above the resistance 1 or 2 days. We can start in baby size going into small caps, but our best opportunity is going to be when it pulls back or if it pulls back. So we want to save most of our buying power for an event like that. So we're, again, just going to be paying close attention to those small cap stocks going forward. In futures, everything is down. This is the first downward bias that we've seen in a little while. Let's see how significant it is. NASDAQ about 0.25%. And then these are about 10, 15 basis points. So still in the random zone, but it is the first downward bias we've seen in quite some time. So that's interesting to note. We'll see how that moves. We don't have small cap stocks here, so let's check on our indices. Small caps down almost nothing. So small caps still outperforming starting from yesterday. So this is something new and something worth watching. Let's see how that developed. If we look on our day trading, our pre and post market, we can see that most of the downward movement happened right as we transitioned into the pre-market. And basically that means there's probably something that happened overseas, either in the Asian markets or in the European markets, and not so much in the American markets. If it was in the American markets, we would see it happen at a specific time. For example, 5:30 is a time when a lot of economic reports come out. Let's take a look at that calendar. Yeah, we didn't really have anything come out this morning. The consumer confidence is coming out half an hour after the market opens. So we'll definitely want to watch and see how the market reacts to that. But as of like before the market opens, nothing. There's no reports here for us to take a look at. The only other possibility is earnings, but again, earnings wouldn't happen at 12 a.m. It would happen at 5, 6, 7 a.m. So this downward motion is mostly the world view and just kind of pulling back from these really high levels that we've seen. We did have some pretty important earnings, though. We had both FedEx. FedEx was yesterday. Oh, so it could be FedEx because it was yesterday after market. General Mills is this morning before market. Let's see if they've reported yet. BIS. Okay, so we did get the announcement already, but we're down quite a bit, even though it was a positive earnings statement, a positive surprise. The revenue was a negative surprise. Okay, so we're either focusing on revenue or there's something that they said in their forward statements that the market didn't like. This is down quite a bit. $2.50 on a $66 stock. So down 3.7, 3.8. So not huge, but it's twice the ATR. So it's twice the normal movement in General Mills. So it's definitely not random and it's definitely significant. Let's take a look at FedEx. Wow. Okay. So this could be a major reason since we don't have a lot of volume and all we have is technicals to go off of. FedEx could move the market because FedEx is pretty large cap and it's very indicative of future economy. But normally we wouldn't expect it to have a huge effect on the market. Since we're in a very thin trading environment, it maybe did have quite a bit of an impact. You can see this is a huge drop. Pre-market, we're looking at 249.5, down from 280. So that's 30.5 divided by 280. That's 11%. So the market really didn't like what FedEx had to say, I guess. And their package delivery is very indicative of both consumer spending and retail sales. So they are reflective of upcoming economic news. This is a huge, huge drop. And that's probably why we have this negative bias in the market today. So it's going to be interesting. If we look at our indices, you can see that it's not having a huge effect on the index, but it did give us that downward bias. And we'll want to watch carefully what happens. And then maybe consumer confidence reflects what we saw in FedEx. If the consumer is becoming less confident and they're spending less, we're having less packages delivered, that becomes a more complete story. So if consumer confidence supports what we saw in FedEx, then we could really start seeing some negative bias coming into the market. Let's take a look at our pre-market levels and get some new lines in here because these are going to be less relevant now that we've broken up above our previous week high. So I'm going to get rid of some of these lines. And then we'll draw new ones based on what happened yesterday and in the post and pre-markets. Okay, that looks pretty good. So we are probably going to open in the next half hour. I don't see us moving all the way back up to this purple line. So we're probably going to open in between the previous week high and this purple line right here. And we're going to want to watch. So the first half hour is people jostling and repositioning themselves. And most likely not anything significant there. Then we have that consumer confidence report happening at 7 o'clock. So right around here. So we'll want to see that if that 7 o'clock report causes us to break it down or above any of these lines, most likely it's going to be these two lines. But if we cross any lines because of that report, there should probably be another line right here. There we go. Okay, so be careful in the first half hour and then really watch out for that economic report. So if I was a day trader, I would completely skip the first half hour. I would wait for that report and look for opportunities after that second half hour. And then that half an hour to 1 hour after that would be my first window of trading. And then we would go back to your normal trading schedule. Other than that, we're just going to wait and see. We had thin volume in the markets yesterday. You can see that we are below average on Monday, even further below average on Tuesday. And this is a pattern that we're probably going to see throughout the entire week, lower and lower volume as more and more people are focused on holidays and maybe going on vacation. That's both retail traders and institutional traders. So this week, unless there's a huge and significant movement, we're not going to make a big deal about moves like this, small, tiny moves to the upside. And the IWM is, even that is starting to somewhat become significant, but we don't make a big deal out of it as well, because that's, so what was this change? 3.82, and its ATR right now is 3.66. So it's just barely outside the daily range, the normal daily range. So it's not a huge deal, even though it is significant that it was up 2% versus only 0.5% in the QQQ. So that's it for today. We still have that upward movement. We still have the bull trend intact in all of our major indices. We are seeing tiny signs of weakness and negative bias. So far this morning, still in the random territory. So we're not going to make a big deal out of it. The consumer confidence report coming out at 7 o'clock, that could turn around and still go back up. But if not, if we start moving down with conviction and momentum, then it could be the start of our pullback. It's really too early to call right now, though. I wouldn't want to draw any conclusions either way. So we'll just watch out. We'll see if we get a non-random move today, meaning that we move significantly more than one ATR movement. And if so, then that'll give us a clue and direction. If not, it's just more randomness. It's just more chop to the side, even if we have a slight upward bias or downward bias to that chop. So good luck. Have fun today. I will enjoy the rest of your day, and I will see you in the aftermarket.